Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
I've got a bonus episode of the podcast for you today. You've probably noticed that the price of everything seems to be going up a lot recently. I know in my everyday life as I'm buying things, it just seems like everything I buy is just a little bit more expensive than it used to be. You've probably seen on the news that the price of lumber is up 300% over the last couple of months. The price of steel is up about the same. The price of cars is going up. We've seen a ton of appreciation in housing prices over the last year. And I wanted to learn more about inflation and how inflation is either going to help us or hurt us as real estate investors, and how all of this may affect mortgage rates going forward. So joining me on the show today to talk about this is Chaley Ridge. If you've been listening to the show for a while, I'm sure you know Chaley. She's been with us a ton of times in the past. Chaley is also a sponsor of the podcast, and I just want to point out that Chaley is not paying to be here today. This is a topic that Chaley knows a lot about, and I think she will do a good job of educating us. So let's take a really quick break. We'll thank our sponsors. We'll come right back and we will talk to Chaley. I want to let you know about a really easy way to track your rental income and expenses. It's an accounting software custom made for rental property investors. It takes just seconds to enter an expense or to record that you collected rent. It makes tax time really easy. Just run a report and give it to your tax person and you are done. They're currently offering a free 30-day trial. There's no credit card required, so if you don't like it, there's nothing to cancel. You can learn more and sign up today at rentaltrial.com. That's rentaltrial, T-R-I-A-L, rentaltrial.com. Chaley, just to make sure that we're all on the same page, why don't we start off just having you define what we mean by inflation?
So in general terms, inflation is simply just a decline of purchasing power, right? Over time, given the currency, the actual currency in that particular space, it's that decline of purchasing power over a period of time.
Okay. So, and this is something that is always going on. I mean, there's always inflation. The price of everything is going up, but it's just such a small number that we don't really notice it too much on a day-to-day basis, right?
Correct.
So, I was thinking, it becomes really noticeable over time. When you think of, like, if you watch old 1950s commercials for Coca-Cola or McDonald's and you see it was 5 or 10 cents for a Coke and a hamburger. But today, those prices are $1.50, $2. I mean, that's just 70 years of 1 or 2% inflation.
Very modest over time. Absolutely. So if you think about what you can buy for $1 today versus even anybody listening, go back to when you were a teenager. What was $1 worth then versus what it can
Right.
do for you today?
Yeah.
And a lot of times you're right. It's a pretty slow progression unless, we have certain external environmental elements that can create those influx. And we're seeing some of that over the last couple of years. I don't know that I would say that the pandemic itself is the culprit or responsible. I think that we've been seeing some other things pre-COVID that started the movement upwards, but we're there. And I think a lot of people are starting to feel it in a more real way.
In most of the country, we're seeing a lot of inflation in real estate prices, that prices are going up and up and up pretty much all over the country. Why do you think this is happening right now?
I would tell, and I a lot of this is just kind of common economics. When we see that the pricing, right? We've been noticing everybody that's out there that's either purchasing a primary residence or looking to purchase a rental property, the bidding wars are running rampant. And, I very rarely want to put a blanket on the entire nation. Typically when I talk about things like this, it's very market specific. But I think generally, as a pretty big majority or majority average, I guess, housing prices are definitely going up, right? Mm-hmm. You're putting a bid in for $100,000 and you're getting outbid by, $115,000, $120,000. So I think everybody agrees that in most markets that they're purchasing in, that's what's happening. Supply and demand, there's just not enough properties that can support the demand of purchase, especially on homeowners, not investors, but people wanting to purchase their primary residence because interest rates are so low. And the affordability in that case has been very positive for the housing market. Inflation also is going to lead into, now let's move that over into the investor side for those of us that are purchasing for investment purposes. We're going to start seeing the rents go up as well. It's also going to be a function of that inflation piece. But while interest rates are really low, we're going to be able to take advantage of that. And it's definitely going to be at a huge advantage or a big benefit, I think, to us, at least for the foreseeable future. I don't see, and while we have kind of some ebbs and flows always in interest rates, the long-term mortgage bonds, I think rates are going to remain low for at least the next year. And I usually don't like to predict past a week, but I think we're going to see some nice low interest rates for about 12 months, maybe more.
That's good news. So talk me through, if we do start to see more inflation and we see rents going up, the mortgage payment is going to be the same. So it's almost like you're paying your mortgage back in cheaper dollars. Am I thinking about that right? That like
Absolutely
your mortgage,
right.
it becomes just less of a big deal over time.
Yeah,
right.
Absolutely right. And that was a great way to explain it. So as we continue to see the rents going up and interest rates kind of have leveled out, that spread, right, the cash flow or the rate of return that we were expecting on the passive income side the margins are going to start increasing. So, the repayment, if that's part of the philosophy right now, if they're looking at stockpiling that passive income and accelerating mortgage debt, they'd be paying it off much quicker. So the other thing, too, that might be the flip to that, as people are looking at this just from a baseline, they're seeing that the housing prices are going up. So they assume that the margin that we're making over here, the benefit that we're getting in the low interest rates, and as rates go up, but if the house prices are going up too, that the payment is going to kind of follow suit. If you actually do the math and you look at the payment difference for the investor, the actual mortgage payment for $20,000, but the rates are remaining low, that's going to be, I don't know, $20 a month, right? You can do the math depending on the interest rate, et cetera. But because a lot of times when I have this conversation, the argument or the comment might be, well, housing prices are going up too, along with the rents. While that's true, it's not going to be a dollar for dollar. The rents are going to be going up at a faster pace than the math or the equation is going to yield when you look at $20,000 of mortgage debt against a 4% interest rate.
This is something that's actually come up on the podcast quite a bit, and I'd like to get your take on this. But a lot of times we use the 1% rule when we're evaluating deals, but with interest rates being so low, I feel like you can maybe pay a little bit more for a house. Like maybe you can land at 0.8% instead of 1%, and cash flow wise, you're really kind of at the same place.
The answer is yes, absolutely. The cost of servicing the debt, aka the interest rate, the fixed interest rate that you're going to secure, because they're so low right now in this market. And we do have a big thank you to the United States Treasury. I have to just kind of throw that in because they are responsible for keeping rates as low as they have been. They've been purchasing. This is kind of a quick sidebar. They've been purchasing mortgage-backed securities at an unprecedented amount, to the tune of about $40 billion a week, probably more, on the secondary market is what the Treasury is purchasing in mortgage-backed securities right now. So, and that's what's really keeping those interest rates low. So that's been a huge boon to what we've been experiencing over the last year plus, well, really just the last year. But going back to your answer, absolutely. The cost or the service of the debt, the interest rate is so low that even if you're not at that 1%, let's say you're at 0.95, 0.8, just to your example, that the math that you're going to do there will still show that the return or your cap rates or however you're going to quantify the return for yourself is still going to make sense and probably going to be higher than most other investment vehicle returns that you're going to find out there. And remember, too, there's a lot of other variables that want to play into that. When last year I was starting to hear investors say things that the returns, the margin compression and things like that, the 1% rule is gone. And I've seen it too, right? Because I'm kind of up here as the lender, and because we focus on investors all across the United States, I get to see the appraisals, I get to see the leases. So I have noticed a little bit of compression there, but it's a perfect analogy to say that, yes, these interest rates are so low that even while that 1% isn't as prolific, as we get even lower, it's still going to make sense for the investment. And I started to touch on, because of all of the other variables that we haven't even accounted for, the tax benefit, the appreciation, right? If you're looking at it as a holistic or from a holistic perspective, you know that because the rates are so low, even though those rents may look to be less than what the norm, that benchmark 1% are, you're still doing very, very well in real estate.
So bottom line, inflation is probably going to come. I mean, we don't know for sure, but a higher rate of inflation is probably on the way. But it sounds like as real estate investors, we're really in a good place to benefit from this, right?
Inflation goes up, rates usually go up. We're going to be in a really good place because rates aren't going up, I think is a better way of trying to articulate what I'm saying. Inflation is coming, you're right. There's no way that they are going to allow in this country the rates to follow suit. Because if you think about the debt that we have incurred, the rates are going to follow from each kind of category. You've got your long-term mortgage rates, you've got your daily Fed fund rate, et cetera. Well, the money that the country has borrowed to support its citizens and all the other facets of economy here because of the pandemic, think about on however many $1 trillion, an eighth or a quarter point blip to an interest rate. Think about the servicing of that debt, how much more in interest it would have to pay before it can pay it down. So if you look at it from that perspective, you know that in this country, they're going to tamper, they're going to keep rates down. While inflation is probably going to do what it's going to do, we're going to be able to take advantage of investors, I believe, to keep rates really low over here, while inflation is going to continue to increase those rents. So I think we're in a very good place for the foreseeable future to be taking advantage of
I agree with you.
Residential real estate.
I think that's a really good point. I 100% agree with you. And I think that we are definitely in a great time in the market, and I think better times are coming up. Well, Shaylee, thank you so much for spending some time with us. If anybody wants to reach out to you to maybe see if they could save some money by refining, or they're looking at buying a property, what's the best way for someone to get in touch with you?
Absolutely. Thank you for having me. It's always my pleasure, Dan. I appreciate it. They can reach us several ways. Our website, www.ridgelendinggroup.com. They can reach us at email info@ridgelendinggroup.com. And then finally, toll free 855-747-4343. 855-74-RIDGE is that easy way to remember, and we look forward to serving them.
That wraps up this bonus episode of the Rental Income Podcast. I'll be back with a regular interview on Tuesday. My name is Dan Lane, and this has been the Rental Income Podcast.